quite are.
Welcome to Momentum Monday. Today is July 23rd, 2023. Howard, have you watched the Barbie movie?
I haven't. I was going to go. Rachel wants me to wait and have to go see it with her. She's coming this week. Let's do a run on the beach this week.
Yeah, for sure. Let's set it up. Yeah.
Yeah, I'm in heavy train mode right now I'm going riding in Spain in September. And our house is almost ready, so I want to have you over. We're a week away. The house will be finished this week.
Great news, Howard.
Are you having fun being back?
Yeah, I mean, the weather here is just incredible. It's just definitely not having the heat. It's just nothing to complain. Yeah.
No, it's fantastic. Okay, take it away. Catch me up.
All right. So, I mean, last week the market started really strong, the first couple of days.
Yeah.
And then we saw a major rotation towards the second part of the week as earnings season kind of began with Netflix and Tesla. Both of them crushed estimates, but the actual market expectations have been so high.
Well, the rally was Netflix. I mean, this thing tripled basically. I sold mine, shared that I sold mine. I mean, I think long-term, Ivan, they're just the winner because this strike kills everybody else relatively. Like there's no content anywhere. Like I was talking to the A24 guys and other than a few movies, like no one can break the strike, no one can break across the picket line. So you've got writers and actors on strike. It's starting to get expensive. The A24 guy, like they're saying that like at some point Biden's going to have to get involved and get everybody back to the table. And what's super interesting, I mean, this is good for YouTube. This is great for TikTok. This is great for Face Meta, and this is good for Twitter, right? Like there's enough kids are already addicted to this stuff. But what's interesting is, CNN, Fox, they're all CNN, Fox. They're all owned by, major studios. So you're not going to get a good shake on the news in favor of the employee, like in favor, So it's very pro Hollywood. The whole thing's just, the systems are kind of, you can't tear it all down or burn it all down, but the systems are just kind of broken. Anyways, Netflix into all that news, no wonder they sold the news, right? But long term, this benefits Netflix over the other streamers. And then what Tesla, they sold off the news, mainly, let's be honest, margins. Like they're taking a hit in margins. But
it's making a lot of cars, they need to sell them, so they're dropping prices.
Yeah. I mean, I can explain it through a lot of e-commerce companies. If you're selling some for $100, then you extend your line of products and start selling $10 things. You got to sell a lot more $10 things to grow your top line. And listen, I mean, and then the other story that kind of doesn't ring hollow is, their charging stations will be used by other car companies, but at the same time, that's more competition for Tesla. So again, like it's been a great run, and so hopefully it's just a breather. As I prefer markets going up, so hopefully it's just a breather. Like we'll but on the long-term chart, Tesla, if you go to the monthly, I mean, it makes sense that it paused here. It's had it's doubled off the lows. Netflix is like a triple. We go look at Netflix.
Yeah, 300 is a big level, big technical level. It's completely normal to see some profit taking, sell the news ahead of the FOMC this Wednesday and just ahead of earnings season. Completely normal. That I think testing even their 50-day. I mean, they haven't even tested their 50-day moving average test on Netflix, which a lot of big winners, they tend to do a lot.
Like I've always said, with the 8 to 80 brands like Tesla, Netflix, buying them when they're down 60%, their top lines can't these are the 8 to 80 brands. You buy them not when they're approaching all-time highs. You buy them when they're.
All right. So sorry if you're saying this, are you buying Disney then? If it's down so much.
The issue with Disney is different. If you're a kid today with YouTube and TikTok and Snapchat and all these brands online, it doesn't mean the same. Plus, it's expensive for an average family to go to Disneyland. So it is a different world, right? Like we're talking about different generations. This is a generational company that's kind of run into a bit of a wall. These kids, if they don't do rides, and kids are so used to immersive technology, how exciting are these Disneyland projects? So again, no one complains that they're bad if they go, but it's a very expensive family trip. And Pixar and Disney haven't had, I mean, if kids don't go to the parks, they don't know the characters. And if they don't know the characters, the movies don't ring as true. And the writers are on strike. And, Hulu's a great channel, but you're competing against Netflix. And then you've got ESPN, which supposedly is on the block. So no, I don't consider Disney an 8 to 80 brand. I mean, it is, but I don't consider it.
Okay.
I don't consider it one of the top 10 8 to 80 or top 20, even 8 to 80 brands. So no, I don't see I don't know what the catalyst for Disney to go up other than it's doing bad.
Yeah.
Anyways,
They're
same with Nike. Like Nike, I haven't owned for a while. And again, it's a great company, but it's in a tough spot, But I'd rather own Nike than Disney personally. So again, like these aren't the top 8 to 80 brands. You have to start digital first because of the margins. And we live in a different era. Nike's a great company, and so is Disney, but they can't deliver the margins that the 8 to 80 companies like Google. So if we look at Google, like I'm going to buy Google all day long ahead of these. Why? I could be wrong, but YouTube, I spent an hour and a half there today. A rabbit hole on tennis and cycling and golf instruction. I mean, you go to YouTube homepage, and if you spend an hour on YouTube homepage, just like spending 10 minutes on TikTok, you will get like some of the greatest entertainment and history and educational clips. I mean, that is so undervalued, YouTube. So no, like I'd rather own YouTube than Disneyland personally. So I'm going to own Google way ahead of buying Disney. And that is just, you can't own every stock. And so if you don't own the index, by the way, I would probably take Disney out of, in an unpicking world, I'd probably take Disney out of my S&P 500. But anyway, keep going. Like go around the horn of what's working.
So, I mean, obviously very early in earnings season, but we had two very big, important earnings reports from the semiconductor sector. We had the Dutch company ASML, which is the biggest manufacturer of semiconductor equipment. Like they make the machines that the semiconductor companies use to make the chips.
Yep.
I mean, they beat, but they also sold off, which is kind of reflection of current market.
I think Applied Materials sold off too.
I mean, all the semis are kind of very highly correlated. They trade.
No, but the equipment guys, like AMAT makes the equipment too.
Yeah, AMAT too. But also the other one, I mean, they haven't reported yet. So obviously when ASML sells off, everything else is going to sell off in sympathy. But the other big one, TSM, which actually like everyone is white labeling with them. They're making all the chips for NVIDIA and AMD and anyone you can think of. Like they make the chips. They barely beat. They guided down next year. They said that, the AI chips and the demand for them is not enough to stop the cyclicality of their business. Like the only thing that is growing right now is the demand for AI chips, which only account for 6% of their overall revenue. They expect that to reach the mid-teens. So it's very quickly growing segment. Like they said, 50% a year.
It's also a lot of large number. This is a $500 billion company. Where's the monthly on this? Like,
But all the other aspects of their business, they're not really growing as fast. Like,
and this is why we saw that
pullback after earnings. I mean, just another profit taking. Obviously, when a company runs into earnings so much, you're going to see some profit taking on no matter what the company reports. The question is,
Not in some rip roaring bull market, right? Like we have huge interest rate drag. So it's not like we're in some, it's just a
yeah,
rotation.
5.25, and they might raise it even a little bit more, or at least keep it here.
I think it's 98%. I was reading chart that 98% like baked in, like they're raising, like the Bloomberg number is like 98% likelihood that they're raising again. So that's priced in already.
Yeah, maybe this is why the US dollar started to turn up a little bit in expectation. So we'll see what happens. But so in the second half of the week, as tech stocks pulled back on the basis of Netflix, Tesla, TSM, ASML earnings, we saw a rotation into defensive sectors like healthcare, consumer staples, utilities, which is kind of funny in a world where the 1 month treasury yields 5%, to see people going into utilities or consumer staples that pay like 2-3%, 4% dividend. But we saw that kind of defensive move, like the money didn't really leave the market, it kind of rotated. And you can see even the volume, that's increasing volume into those stocks that have been underperforming for a while.
Go back to the weekly. I don't know what's in consumer staple, like toilet paper.
Toilet paper,
Like what's in consumer staple?
Soup, energy drinks, like Coke, Pepsi, stuff like this.
Give me a monthly there. Yeah, they're kind of sideways.
Yeah, I mean they've been going sideways for a very long time, but the past week definitely we saw that rotation. We don't know if it's going to continue. In general, these are slower moving names.
And then energy is like technically interesting.
Energy, like, yeah, if they can recapture
the same thing as the consumer staples, it kind of rallied last week.
Consumer staples, healthcare definitely rallying. Everything started with the UNH earnings breaking out, but also banks have been rallying too, which we know this year they haven't done really well.
Yeah, I mean Goldman. If you look at Goldman, I wrote about it during the week on StockTwits. Is like that stock was a horrific corridor, and the stock rallied and closed at weekly highs.
Yeah, we're seeing
so
they
people want to look at Schwab. Like I was long Schwab. Schwab just exploded from a bad.
All of them gapped up and kind of holding, and
even Robinhood. So
Robinhood was running ahead of that. It was more of a crypto play here.
No, but you know what I'm saying. Like they're making money. The Robinhood Gold, like people are converting. And with rates at 6-7%, the spread, they can make some money without customers trading. Again, we'll see if these things hold, but it's pretty healthy that people aren't pulling their money out of growth completely. They're just
rotation.
That's what you want to see. And the small caps are probably going to lead the rest half of the year.
I mean, they typically outperform in July, but we'll see. We'll see. They probably need some time to set up again here.
The two best countries are Argentina and Greece. So it's like, I don't trade foreign stocks, but ARGT, like if you look at the weekly, it's been a home run.
Yeah, I mean, Latin America definitely showed some relative strength last week. IOF, which is like the biggest 40 stocks, as you can see. Definitely.
Mercado Libre looks great. I mean, look at that. Mercado
Libre. Meli has been pulled back to the 200-day and then it bounced. So now it's
look at the volume. Like it was a good week. And look, if you go to the monthly, I mean, what a great run.
Incredible company. Yeah, definitely.
That's what I'm saying. So it never it's back above its 200-day.
This is the 50-month. Yeah.
Yeah.
But yeah, I tested the 200-day here, as you can see, and immediately was bought on that gap. I don't even know why it gapped down. But in general, like a lot of the Latin American stocks, they kind of look the same. So Brazil is looking similar to IOF, looking similar to Argentina in terms of price action. So it's interesting to see if we'll see, for example, like US travel stocks have been super strong, like airlines, the crushing estimates, they've been going up. It's interesting to see if we see the same thing like in Brazilian or South American airlines like Azul or CPA or Go, if we see something similar there as people there also, starting to travel. but anything travel related still super strong. Marriott hotel chain breaking out.
Airlines have been strong. United Airlines had a good week. I mean, I don't follow these things. Like just
Airbnb is starting to perk up, making
wow.
here. I mean, yeah, it's still a recent IPO, and Uber obviously super strong too.
Phenomenal. I mean, they kick Lyft's ass. They're going to be the big benefactor from the world going electrification because the drivers can make more money running electric vehicles. There's Uber for old people. I heard that's phenomenal. Like
Really?
seriously, it like goes slower. It helps people get in the cars. There's so many ancillary things now that they figured out their actual who they are. What a brand, right? They destroyed Lyft for all intents and purposes. And there's just, it's not that it's small. I mean, at 100 billion, it kind of has, again, if you survive, look how many mistakes Twitter can make, right? Like if you survive Web 2, the winners from Web 2, because interest rates are high, if we go through the Uber, Airbnb, Twitter, Facebook, even Snapchat, right? Like if you have a user base and you had to figure out your true self, I'm not saying Snap is ever going to see $80 again, but they're out of the woods. Like they have figured out who their audience is. They will figure out how to be profitable. And you can't compete because you can't scale because rates aren't zero. So you are going to see, just like the end of Web 1, the Amazons and the eBays, the ones that survived had great runs once the bear market ended. And I think you're starting to see the same in the Airbnb, Uber. I haven't thought of too many. I guess Mercado Libre. So if rates, settle in at like 4 or 5% and come down over the next year, you could see some massive runs in some of these Web 2 companies. On the IPO front, anything interesting happening? Like
there's only one that's like Israeli-based company also. I mean, they said they use AI to produce their cosmetics and to market them.
3 billion market cap. Okay.
The market is kind of excited. I mean, you can compare that to, let's say, Elf, which is like $6 billion company, or to Auto. Even though the Israeli company is like online only, as far as I know, Auto is 23 billion. So
what about the IPO ticker? Is anything happening there?
Oh, IPO, let's see. I mean, it just pulled back with the rest of the tech. They're kind of very highly correlated. So
yeah, let's see the weekly there. But all the moving averages are now going up.
it needs some time to digest the recent.
There's something cooking though. There's something cooking. I think we're in a pretty good spot. I was reading that like I don't think you can have a bear market anymore when stocks are almost retrace the whole thing. So bear market's officially over. If we plunge from here, it would just be a new bear market. It wouldn't be the same bear market. And
exactly,
yeah. So congrats to the people that really got it. I think you and I have been pretty bullish for about 6 months now on this show, but with rates at 6-7%, I'm not like rushing to pay up for anything. But there's some good setups. I think the IPO, you've had a couple of years now with no IPOs. There's no SPACs. There's very little supply in the market. Yeah. So I just think people haven't invested in a 6%, 7% mortgage environment. And then remember, like the financials are doing well, but like student loans, there's going to be 20 billion, or I think some crazy number coming out of deposits August 31st, September 1. Home builders, but
home builders have done amazing, obviously for various reasons. When you have 7%,
well, the main reason is 08 still in their memory, and they haven't leveraged themselves. They're not supplying anything. They're not building. So that just their balance sheets are much better.
And there's a lot fewer transactions in real estate because people don't want to sell their house and then, you know, switch to a 7% mortgage. So people are not willing to sell. So there are very few transactions going on. So people just go and they buy brand new houses because the home builders offer the best rates right now and the best deals than what you can
But
get
there's
from.
I'm getting pitched startups, Ivan, that are gonna do like, they're
Mhm.
trying to figure out how to like transfer loans and charge a fee. Like if rates stay up and continue to creep higher, which is a possibility, that's what everybody thinks. At some point, you know, too much in this country relies on transactions in that industry. So the banks are gonna have to let people transfer mortgages and get paid a fee, right? So, you know, if you have a 30-year at 3% and the guy buys your house and qualifies, maybe you transfer it at 3 rather than renewing it and paying that point to the bank. So I'm saying, like, there's too much tied up in this. If there's no transactions, that's not good for America. You know, America survives by
Or you can
transactions.
do like 50-year mortgages, you know, that'll help.
So I think all the bears don't realize how important this is to the country, and like America kind of figures this shit out. Most importantly, you watch Oppenheimer. You should go see Oppenheimer. I mean, if you ever want to bet against America, I mean, that was the era that, like, I'm saying, it's an interesting history lesson about, you know, we were behind to the Germans, and then again, you know, they went and fucking built a bomb. You know, so I think they can figure out how to fix transactions in the real estate market. So, you know, when there's a will, there's a way, and that market's just too important. And the industry's setting up in such a way that there's some good. It feels like there's some good news coming. Now the question is, do they sell the good news or not? And that, I don't know that part.
Well, even in a bull market, it's normal to see 10, 50% pullbacks that can shake a lot of people out. So,
But I think overall, the Web2 leaders are setting up good. Like they have no competition, even including Robinhood and Coinbase, right? Like you can't go compete against Robinhood, and people are starting to forgive them, right? Like if you bought Robinhood in the last year, you're now up, right? You don't care what happened in the GameStop era. So if you bought the stock in like middle of last year, you now love the product and you're actually up on the stock. So you're like a raw, you know, I'm talking if you're June, July, August last year, you're up.
yeah.
So, you know, there's a lot of fresh people in this industry that now have like a positive view on some of these Web 2.0 companies, right? Like you like Uber, you like Airbnb, and they're not going anywhere. And you like Robinhood and Coinbase. And, you know, it's just like I was telling the guys last week, it's just like Chipotle's. Remember, they get packed now. Remember their food poisoning thing?
Yeah.
How long did that take from when the food poisoning
What
hit?
was that? I don't remember. Maybe here somewhere.
Yes, no. It was 2021. I thought no, maybe it was those 2 years,
Yeah, it was somewhere here.
right? Guess what? People forget if the product's good.
Yeah.
People forget now if your product's shit, right? But Robinhood's a good product. Uber's a good product. Coinbase is a good product. Airbnb is a fantastic product, right? Snapchat's a great product. So you know, they're just very heavily big market caps. I mean, so those are the differences, you know, so they still got a lot of resistance to chew through. All right, buddy. So energy, healthcare, there's some rotation going on.
Yeah, definitely rotation and a lot of earnings. I think Microsoft reporting Apple this week. Obviously, the FOMC.
Apple's not giving an inch, are they? The stock's right there.
Apple holding relatively well.
Just not giving an inch.
Slower mover, but it's just relentless.
Microsoft not giving an inch either.
They're pulling back a bit, but just to their 20-day. I mean,
Yeah.
I think it's normal to see even deeper pullbacks than the 50-day in an uptrend. But so far, definitely among the leaders, Microsoft, Apple, Nvidia.
Okay, buddy. Everybody have a good week.
All right, see you next week.